Back again. Hello. Yeah, we're gonna go over something that I find a lot of people might struggle with in trading throughout their journey. Something that took me a long time because when you use confluences, sometimes it can mask what's actually going on. So I'll explain exactly what I mean. So here we've got, if you don't look at the weekly, like realistically, your life's gonna be a lot harder for consistency. So it's like here we've got the demand chain, supply chain. Sorry, just being a bit weird. Like, so we've got a demand chain there. We've got all of these sweeps of this liquidity going on. So some would say it could be a reversal, or you could get some buys involved, or the market might change and go up from here or whatever. Um, and this is just kind of one example of thinking in that way. When in reality, what we're looking at here is some wick liquidity on the demand, and we're looking at probably this to break structure at some point. But what you'll find is the market will provide you with information to tell you otherwise. So what you might look at here is some buy opportunities, but realistically, you see how price is kind of tapping into the areas here. You've got some more areas of supply here. Um, and you just want to be looking kind of more at shorts. I mean, I know we've had the structure, the main structure is bearish, but then we've had some bulls, and we could look at some bulls here. But I'd personally now, instead of look for some pullbacks, I would look more towards this failing and coming down, or even reacting, coming down and pulling back up into premium before going down. But it's just more of a trap. That's the thing. So you look at it now. Um, See that? I mean, you could trade or look at that from a perspective that it's a buy or it will come back down into this area, but it's just kind of wrong. And it's the way of looking at the market in the wrong way. So when you learn these kind of strategies and stuff, this is one of the biggest patterns. This is just one example, but it will happen a lot, and you have to be aware of it and just identify what the hell you're actually doing, because there'll be a lot of confluences on the other side of the market which don't make sense. Like, yep, we're in discount. We've had your 4 hour change of character. It could be a pullback area. This could come in and do this and everything, and it makes sense, right? It makes sense. It's like, oh yeah, no, but it's just, it doesn't make sense. It actually is wrong. It's so counterintuitive, and almost now I'm at the point where I do the inverse. If I see a counter confluence like this, I'll do the inverse and I'll go against it. Not exactly, but when people say, "Oh yeah, I'll get like a 1 hour and it flops," it's because you're on the wrong side of the market. There's no other reason. It's normally because they give you the reaction and then they smash through. They allow enough people to get in the market, and enough people are in the market in that position for it to move a considerable amount before either the hedge funds or whatever get involved and just smash you out, because that's the way they like to do things. But yeah, if I've learned as well, if your thing's in stop loss and it's in the stop loss for ages, it's not good. It isn't good. Just leave it alone. But yeah, I've just learned the best trades are the ones that kind of just go and are away. You're not sitting there contemplating life. But anyway, we've got this here. We could look for realistically a 4 hour change of character from this point. We are expecting some sort of pullback now. So from here, obviously there was a nice pullback. It might come into one of these zones. And then we've got the premium. Notice how not many tools really going on at the moment, just some nice simple ones. And a nice 4 hour change of character as a reversal would be perfect here. Um, Let's have a look slowly. There it is. So what you'll notice is this. Nice entry or whatever. Nice entry. Because it's pulled back, it's changed character on the 4 hour. It could, reverse and go up again, kind of come up here. And, if this doesn't make sense, or you think, what the hell, what are you doing? I think that now as well. That's fine. That's why I'm showing it to you. But there'll be multiple times that this doesn't work across all sorts of time frames, pairs, everything. And what you want to look here is just the realigning of order flow. There's the shift in momentum, a nice supply there, and what I look for now is if there's a buy here, you might get a nice reaction tapping into here and then fly off. That's like the 1-to-1, yeah. That's where you get your reactions from. May not happen, but that's just for the sake of principle. This is the position that I would enter, something like here, Say even with my 60 pip thing. Does that cover the high? Yeah, just about. Ideally, I'd want to be looking at the 1 hour or place a limit order kind of here in the halfway OB point and do a nice 1-to-3. But yeah, we could have a look, see what goes on, because it might just smash through. You never know. Oh, see, there's a nice wick there as well. So that's a counter confluence again, because that is a wick of liquidity, and on the wrong side of the market, it gets me gassed. It gets me all like, oh, yeah, there's like a sweep of liquidity. There's a nice buy entry. So I'd be looking at another buy entry here or whatever, and just going on the mad one and just, so many counter confluences that will mask you and it will provide you with this information, and it's just lies. It's just lies always. So we've got some kind of flip point of interest here. I mean, nothing's really in premium, so that would be an ideal one, this top one here. There's a lot of inefficiency in the market, and this leg currently standing, I mean, say if you had just shorted instead of bought here, literally just a short instead of a buy. Look how productive that is realistically, because the amount of times I'd look in the market and I'd go, if I had literally pressed sell instead of buy exactly on that entry and had the same stop loss, I honestly would probably have quite a bit of money. And it just makes me look at the markets completely differently, because right there, I know that's a trap. You can get that nice 1-to-1 or whatever, but yeah, there's a nice sweep there, easy. That would have tapped the entry as well, which is quite nice. I mean, it wasn't that intentional. I was looking at it before with respects to just placing the order, but you get what I mean. There's a nice leg there. There's within that most recent leg, it is in premium. It's mitigating that extreme wick, and it's very nice. You've got a 60, maybe a 1-to-2, nice conservative risk reward. Nice open profit. There it is again. You could probably even look, I mean, I could have done it all live or whatever, but you could look on the 1 hour for more execution here. There's a nice kind of change of character there. Really efficient price action. And then all of a sudden you've got this one wick that has swept some stuff. So it's swept a little bit here, and it's kind of respected the supply, and you've got a lot of buy side liquidity here, like a massive pool of it, and the market has just gone boom, took a load and just flew down. So in terms of validation, that is a valid setup. I mean, it's probably in the news or whatever. You probably don't want to be doing trades like that unless you can know for certain, but in terms of pure price action, that makes sense. Let's see if it was in. There's a lot going on the screen right now. Sorry about that. Let's take some stuff off in a bit, but this is the equilibrium, and then your entry around the equilibrium. It doesn't have to be exact. This isn't about perfection. This is about where price is likely to go, and where it isn't likely to go, because somewhere like here, it isn't likely to push up anymore. And this wick liquidity is such a killer, and counter confluences like that should be taken as a complete inverse. I mean, it's quite complicated when you think about it. When what I'm trying to say, you're thinking why there's only certain times that is inverse. This is the experience of the high time frame where the momentum is and where it tries to catch people into positions, and you can find it with your own back test. So I'm not going to spoon feed it to you. You can do your own back test and see what works and doesn't. But I wish somebody told me this, so then I was able to do the inverse of the stuff that I knew didn't work, because the confluences were very dry. There was no high time frame narrative. It was always on the back end of the high time narrative. It was always a counter or fighting order flow, but they had very unique technical analysis that made it seem very hard and complicated, that it was like, oh, I'm on the other side of the market, but the market's tricking you. So, I'm doing what everyone else isn't doing, which is going to be the reason it works. It's just lies. You've seen how I've just done 4-hour order flow continuations, just break of structures. It's so simple. And like in the previous video, I did a break of structure and just caught supplies all the way down. There was no other confluences, there was no wick liquidity, there was no inducement, nothing. It was just 4-hour simple order flow and catching trade after trade. So yeah, that's just a rundown of an inverse setup, and how to go about it. If you see stuff preparing in the market, use it as an opportunity. If it looks like there's going to be a lot of buyers involved, like here, nice sweeps liquidity, it's in discount, there's a reaction. There are people getting in the market here, and the people that are interested in driving the price in the right direction are the ones here, and doing the complete opposite of that. But don't do the opposite of every trade. That's not what I'm saying. I'm just saying in certain environments, you'll find most of your losses and opportunities come from those. There'll be so many opportunities where this happens, more so than the higher probable ones, like here, this top one. I mean, the likelihood of it coming here is not very much at the moment, and you're going to sit there with your sitting on your hands for ages trying to wait for these setups, and then you'll be trying to take all these little counters and stuff when you should just be doing the opposite every time. So yeah, that is the first step. So this next bit as well, I'll try and be quick as well, as the last video was something like 40 minutes long. So I know ICT does this, and I think you should probably watch him over me, but I'm just showing you some very basic stuff that I found quite recently from this video, that I saw the whole thing. I saw the whole thing fall between, like, just go beyond me. And I just watched all of the money pass and didn't do anything about it, because I'm so used to my old ways of trading, and I was so unconfident by how simple it was that I just thought, nah, I'm just going to watch it. So now I know it's very simple. What we have here is, I'll just give you a little bit of perspective. I mean, we can have a look. AU's been doing a bit of a madness. We've got a sweep of liquidity here. It's kind of swept the highs. It's gone higher, but the thing is, it is kind of ranging. There's nothing really going on. Like, realistically, it's a bit like left, right, up, down. But we are low in the leg, and I've just learnt in life, you can wait for reversals. You can just sit there waiting for the reversal for ages, which is the best play, realistically, is waiting for a reversal. But you can just keep trading the order flow until it changes. Like, you can just keep, like, in this particular environment, we had this massive sweeper pullback, and then we had some Trump news go on, which completely fundamentally affected the markets to continue bearish. So obviously, we've got some pretty strong counter confluences here with respects to AU. So what we want to see is this break and just a pullback and just keep going. But what I've found is, here we've got a wick of liquidity. So what I was saying previously is, this happened earlier and pulled back. So people like to look at the market as what's happened and make plans based on historical data from last week. And if you say you don't do stuff like that, maybe you don't, but sometimes I'm either a madman or I've done stuff like that before. I thought, oh, look at the pattern. It's lies, because that you could have done a counter, but what's the point? You'd have got way more out of even just having a slap in the limit order anywhere around this area. And here people are like, oh, there's a nice break of structure, and it will come into here, and there'll be some nice buy opportunities, and see that inducement there as well. So there's a shitload of buyers in the market, and wow, just smashes through. Like I was saying earlier, you've got that, and if you just do the opposite, I guarantee. Let's do the 60, just because I do 60 pips, and then do the opposite of that. I'll guarantee you, even with the reaction of 60, right here. It did not reach it exactly on that entry point. It did not reach it at all. Madness. So you're doing the opposite. And I'm still getting, well, 2R out of it, pretty much. And like here, there's a wick of liquidity, but it's on the wrong side of the market. It's not on the side of the market you want. Yes, we're in discount. Yes, there is a potential for it to pull back, which is what people think. They think, oh, signs of reversal, it makes sense. So the market is wicking the lows. It's just wrong. Like there's not enough to go on here for it to be a reversal. For a reversal, I want probably with this going on like a daily change of character. If not, I want to see this as a flip. I want to see some continuations, and I would probably get involved as a minimum on a buy like round here, and it would have to make sense. It would have to have enough flip and enough demand control as opposed to supply for me to do anything about it. But let's go here anyway. Let's do the 60s because you can get involved later on the hourly as well. You know, just do the 1 to 2s and go from there. So we have got. Let's have a look. See if there's any commitment on the 1 hour of a drop off at all. So we've got like what time is it as well? 7 in the morning. We've got one here potentially. It might come higher, but we can just count our lucky chickens. If that means anything. See how that overlaps. I mean, you would lose one and get back in. So you know, we will see. There's another one there. I'm tagged in. I mean, let's go for that one. So the thing I did there was that was in premium. It swept some liquidity. There was a 1 hour change, but realistically, I don't really care whether or not it loses or wins. There was a demand chain that kept going. So that was the demands. There's always a reason for it not to work. I've never had a loss and gone, I have no idea why that happens. There's always a reason. So see how the demand chain carries on, and then it swept my liquidity, tapped into this 4 hour perfectly, pretty much, and tagged me in. Then I looked for the 1 hour confluence. So that was a FOMO trade, but it doesn't matter. You know, it could have gone without, and it gave me enough incentive to warrant a potential trade. But here, I don't think there was enough reaction, and the demand just kept holding. So, you know, on a 15-minute, probably wouldn't, but it doesn't matter. We're in 2 positions now anyway. Let's just see what happens next. In terms of breaking even, I would not be looking to break even as yet. This is a wick low again. There's probably going to be a retest of some sort of highs potentially. And let's have a look. There we are. I would now break even on both of those trades because it's very close to the take profit. And the last thing I want to do is keep it open, it go towards my entry and slam me off. And then I've just gone from almost making a couple of £1,000 to losing 2%. There's no point, is there? So let's see if it does the 5R. Hang on. There is another entry if you want to be greedy. It's a nice one here. Look at that. Let's do a nice 60 pipper. Even do a 1 to 1 or a 1 to 2. Let's do a 1 to 2 just because why not? In reality, it's still bearish. We're looking to maybe break this leg. This is the very low of that demand as well, so that makes sense as to a potential target profit too. So let's give it a go. So now we've got our 5R, so it's 4R total. So we can slap that on. We had -1, and we had a 2R and a 3R, all at 1% risk. So 4R total, just from 4 hour and hourly. And we have got here this nice kind of inducement from the higher, and it would be nice to see a change of character here for a load of early buyers to get involved before it flops, because what will happen here is you'll get a load of counters go, it's changed the character, happy days, but we never know. See what happens. There it is. There's the change of character. There are the buyers in the market. It's just such an early confluence that I would actually short this right here. Just grab that. I mean, this has mitigated this area. See how the wick, there's 1, 2, 3, three of them. So obviously it was going quite quickly. We've seen the price action. Let's just bring it down there just for the sake of looking at it from a different perspective. We've got the change of character there. It's like a market order as well. Wow, let me get rid of this. That's better. It's not really a change of character, is it? There's some micro changes or whatever. Let's be honest. What we'd like to see on the 1 hour is this. That would be an ideal situation. Absolutely, like a nice sweep up there. But if we're not going to get it, because it has mitigated this kind of range of this order block now, sweeping all of this liquidity, and we've got these buyers in the trap on the inverse of the market. So what we do now is kind of wait, see what happens. And you notice as well how that entry wicked here, and people would maybe re-enter thinking, oh, it's took the stop losses out, it's coming back up. And it's just not. So I personally, you may have a different experience to me, but I've done stuff like this in the past where I've gone and re-entered the market again here thinking surely it will go up now, because to me that looks like it was hunting stops as well. If you were looking at the buys, it kind of wicks out, continues, but even a flip here from this entry point, some of the entries I used to look at if you had shorted instead of bought, as I've been doing previously, on a 30 pip, exactly on that entry, it would have been pretty perfect for not even coming back to it. So you just notice that these areas are very good areas for just doing the inverse. They really are. It's something that I've learned because my brain looks at complications in the market and uses confluences that don't really make sense or have done in the past, you know. So yeah, let's have a look there. That is a nice opportunity as well for a short. I mean, just missed that because I was spamming buttons, but that's in premium. I mean, we could say I could have took that, but I didn't. I just kept clicking buttons, so it is what it is. But when it comes too far away, when it comes too far from the objective, you cannot continue to keep a position in. That is the most recent leg, and it's come down to here. You want to realistically catch anything if you're looking at a lower time frame around the top area. You want a nice reaction, tap in and do the move. But if it moves too far, you just wait for another breaker structure or some confirmation, because right now, if you've got a limit order here, the amount of times as well it will come up and it will give you a reaction and it will go the other way because the move pretty much done. And if you had got in there previously, you would have broken even and you would have been like, oh well, I broke even on the trade, who cares? So just be very cautious when getting involved in trades later, because if it's reached the equilibrium, especially if it's a counter, oh my god, you should not be going anywhere near that. You should be not touching it with a barge pole. Using these old sayings, English phrases. I've never used that before. Now I am. Here we go. But let's continue this on. See how far we can take it, because it's December here. Well, December's not very good, is it? So it is what it is. We've got all that. This is the next one. See if this goes to real time. Maybe it does, maybe it doesn't. But let's do it like a 60 pipper. Let's just do a 1-to-1 because it's taking the piss now in terms of how long this short's gone on for. But even if a 1-to-1, see what happens. Nothing. Brilliant. Nice. But you get the gist that there were so many confluences that could have presented on the other side of the market as to why it could have been a buy. Something like this as well. Well, actually, this was the last time I used the counter confluence that I used to use. See this? Look on the daily. It looks like a nice wick of the low, and it closed on there as well. It closed on the low, and you're thinking that's a nice wick of the low there. That could be a reversal opportunity, and I could get a nice 10-hour trade from that if it goes anywhere from here. and it just won't. That's just the initial retest of the area before it decides to flop. So yeah, I hope that helps in some sort of way, in terms of looking at sells. I know I've picked out particular elements in the market, but when you look at it, somewhere like here, it's changed character, and there are just buys after buys after buys here. I mean, anywhere. It's got to the point that's such a strong bullish market that's wicked that low there, and it's just gone flying up. It hasn't even come back for that. It's just about come back for that. There's a nice, clear, directional, just bullish momentum, and if you look at it the wrong way, you could look at that as a change of character. You could look at the sweep of the highs and the lows, and then you could do. And there's some nice reaction there as well. Getting you all trapped up in the wrong. It's crazy. It's crazy. You have to remember these things. I'm not teaching you basic stuff. I'm teaching you when you've learned these things, you've learned these indicators. Make sure you're looking at it from a pragmatic point of view. That sweeps the low there. That is a clear liquidity sweep, and then any entry on the inverse of what is going on here would be so much better than doing any of that. When's this 20? So if you look here on how the reaction goes, if you look at the market the wrong way, you've got the change of character. It's so yeah, you've got the change of character here, and on the 1 hour, probably finds there's a nice change of character on here as well. It will show you confluences on the other side of the market, and when this happens, through experience, you'll know when that's a good indication of you doing some nice tight um, inverses, essentially. So let me just wait for Microsoft Edge. There it is. Patience. So right here, if you really wanted to, that's why I like using 60 pips, because big ones like this, if you want to get involved on the surface, you can. Or you could just wait for this wick to be mitigated and go lower. But I used to look at things like this all the time and do a short, you know. And as I was saying earlier, if you're to do a 30 there, nice 30 pip, and just do the inverse on the other side of the market, which makes sense, you'll find it will probably work. Not gonna lie. So let's see if we can catch it. So that is in this entry now. Whoom. Notice how literally exactly on that position. I mean, we could have gone here and we could have looked at this demand and gone off there. That would have been a better play, to be honest. But it just shows you the power of these traps. Honestly, throughout the years, I've got better at them, but now I know where they are. They're just so powerful because they show you changes of character and small refinements of reactions like this, and it's all a lie. It's a scam. Um, so yeah, it's interesting to know, isn't it? Realistically, when you come to identify the power of the high time frame intention, because who's looking for shorts realistically? Like that's why you have to be fundamental in your plan. There's a nice sweep there. It's in discount, pretty much waiting for anywhere in this premium level, you know, um, which is what it's done essentially. It's gone into premium and tricked everyone into thinking it's a short because we've come into premium here. But it's just such weak confluences and there's such clear price action, but subtle on the other side of the market. Like this is a subtle sweep, and if you're looking at it the wrong way, it is the change of character, or I might just wait here to make sure it is a change and everything. And we've got the reaction, but the reaction is a negative and it is wrong. And you'll find you'll get excited because you've missed all of them. You've missed these buys, and they're very simple, and you get agitated and you want to be in the market, and that's the psychology of it. Realistically, it's the psychology. And Obviously here, if you wanted to, you could do like a 1 to 3 or whatever on that 60, but I'm going to do a 1 to 2 with that one. And then this one, just do a nice 1 to 3, and that's a 5R. And it's way less stress doing these things than going on the 15 minute. Because if you look on the 15, that's pretty much all of it. Let's have a look here. That looks like it could have been the high of the day on the wrong side of the market. 7 till 10, I kind of look at the algorithm as the printed high. I would have gone, yep, that's 7 till 10. It's done to change of character. It's kind of flipped this position. There's a potential short here. It's done the reaction off the short. You could even get in on the 1 minute. There are so many ways of being on the wrong side of the market that when this used to happen, I could make a whole strategy just purely off doing the counters like this. When this happens, look at how doing literally the opposite just slaps on the same exact amount with the same exact stop loss. It's insane. It didn't even give me a benefit of a doubt. That last bit where people are waiting for the confluence and the major confluences of the confluences and the lower time frame is where it's most aggressively going to smash through. And it's insane because you think, I'll guarantee there's some sort of big financial institution that is looking at this particular model of trading smart money concepts in the wrong way, and they're using that and they're going, let's make the market look at this nice printed high of the day, without understanding what's going on. That looks like that is the manipulation, and then there's a nice aggressive entry, but when you look back, that has not broke level at all. There's been no sweep of the lows. That is still in the demand, so you can just be so unclear in the market. You could literally, it makes so much more sense for buys here completely. And even if it is at the end of New York, it doesn't matter. Like, I see people say about how strict you have to be with intraday trading, which is probably a thing, like maybe doing London, specific criteria in London that you look for. But I've looked at all the sessions all the time, and I don't really get it. I feel like when a trade is present, especially the end of New York, you'll find that there's a final sweep of liquidity of all of it. Like, you'll see the kind of reversal from the buys in the London session, which people like to go on about, that there's buys in London and then there's normally shorts in New York. But just look at the lie, that if you were to go off of that, there's some buys there, there's some shorts there, goes back to buys, sweeps out the high of the day. It doesn't work in most circumstances when it comes to just looking purely at that, with the counter confluence being, it's not shorts. The only time it does really work is, I could find an example, but say it's 4-hour pro trends and you're looking at trying to get involved in a 4-hour demand of some description, and you just want some lower time frame confirmations to make sure your entry makes sense. Say for instance here, if we had this and that was the previous day, and you just wanted to make sure that your entry was pretty sound, you would go on the 15 minute, and sometimes you can catch the Asia lows if it makes sense. So if this makes sense that it's going to be a buy from here, and it hasn't been the following day, and Asia's just formed nicely around here, and you're thinking, there's a nice Asia session, probably going to sweep Asia and manipulate that trading session, and then I can catch the low of the day and then reverse with a New York continuation. That should be a secondary confluence to your primary goals in high time frame trading. Do not look at all of these small confluences like the London highs and lows and printed and reversals from New York to London, and Asia sweep manipulation and inducement and low time frame confluences if the entry and the model doesn't make sense. You have to make sure it makes sense and then look at secondaries. And you don't even need to do that. It's just an addition. And people are so focused on having all this low time frame confluences all the time, thinking like, I've got to do everything. And it's just lies. Because if you were to do it every day, that could be the high of the day, but it's not, because it gets swept at 3 o'clock. And see how I was saying about the New York sweeps? and it just manipulates just all of the session. Because what it's done is anyone that has got in here on any shorts gets mashed, and anyone that thinks that's the low of the day gets mashed. So it's a limited environment, and hats off to anyone that can do it consistently every day and do 2 or 3 trades a day. Like, fair enough, they're doing something I'm not, but I'm just showing you that, like, this is what I've found worked and hasn't worked as well. So like this one is just garbage, wouldn't be touching that. Here you've got a nice sweep. You've got the high sort of being printed there. There's discretion whether that's the low of the day and it continues on, but then you've got this and it's too late, and then you've got this potential area, and I mean that could work. That's one of the times it could work if you're just looking at those small conferences. And the same with here. If you're looking at that being the high of the day, when's 10 o'clock? 10's kind of like here. You could do another short, but it's like 50-50 occasionally. Depends where the market is, If you're just looking on the 15, that could be the high of the day. But that could be the low of the day, so you kind of have to wait and maybe get a short here. This one, you've got a massive accumulation range and the equilibrium mitigated for a buy. So there are ways around it, but the thing is, when you look at this, just how it is, it makes sense and it is tradable. But if you were to do it every day, it just won't make sense. Like, I may have got in a couple of trades here just looking at pure price action, but to actually go and trade that with all of the other confluences is going to be it's going to be a mixture of madness, But let's just look at some more low time frame stuff. This is obviously a nice sweep into the extreme at 1 o'clock. But how would you know that that's where it's going to go from, realistically, just looking at this? I mean, you've got all of these wicks of liquidity going on here, all this madness, and you're thinking, like none of them close below. That could easily be a buy opportunity for a reversal without knowing what is going on in the high time frame. And you've got the wicks of the highs of the lows. This is just a range. If you're trading that, you're a madman, because it's wick the lows, wick the highs. Predominantly, it's more towards the lows, and you've got some retest going on here, and you could do some shorts. There's always opportunities in the market, and there's always places for entries. But this is what I looked at, and this is what I'm showing you now as to why I think it's probably took so long, because there's so many opportunities for you to think that you can make a lot of money every day, and I'm sure at some point in the future I will be able to just utilize these to my advantage a lot more frequently. But you just have to get the basics down, and you have to make money on the basics before you start doing these things. Because it's like here, for instance, see all those previous ones that we thought would be the short of the day. We could have said, for example, without respect to the high time frame, we could have said that is the high of the day being printed, and it just smashes through. So there has to be cause for effect for it to be in a certain position for these low time frame conferences to work. And the same with this one, that looks like it's a nice kind of high of the day, either one of them. We got like the high of the day printed, we got some nice sweep and a breaker structure, got a nice short potential there, and it just whams through. So there's times and places it will work, especially when just looking at pure price action. But I just wanted to share that, because as much as I'm showing you some basic 4-hour structure, like all of these little Asia 15-minute session things, they just need to be used as a secondary, because I could sit there all day looking at what the price has done, thinking that I could be in the market every day, or at least 3 out of 5 days. But it's just kind of pointless, because you are going to get in trades that fail more than they win when you do stuff like that for a long time. And if you just want progression, I'm sure there's other traders out there that can tell you probably exactly what I'm doing and be profitable multiple days in a row. But I do not personally know of any traders that I've seen profits of that trade like that. So until you find me one of those, I'm going to do my easy stuff and add low time frame when the easy entries are involved. But I don't even need to, because I'm doing 4 hour and hourly and making a load of bank off that, sort of. I will be anyway. But yeah, I'm just going to just goes to show there's just no point. Sometimes it's nice to use the 15 minute if you see some really clear direction. Maybe off the hourly, that, if there's a nice hourly setup or whatever, you've got like the 4 hour change and the sweeps of liquidity and stuff. But yeah, that's just fundamentally as it goes. If you're struggling with your trading journey and you're doing similar stuff to me and you're finding that why the trade's not working and why am I using all these Asia sessions, and sometimes it works, sometimes it doesn't, but you're finding too many opportunities in the market all the time, every day, using conferences that have worked maybe once or twice and you've put it into your plan. You need a very strict plan and a strict, obviously, outline of what your criteria is, what your stop loss is, your entry targets, your execution on which time frame. Is it in premium or discount? Have we had a break of structure? Have we swept liquidity? Just very simple stuff, and you just wait for these simple things to go out. And they're normally the most simple ones. You wait such a long time for such easy setups. It doesn't feel like you deserve it. But that is how trading works, and that's why 99% of people fail and only 1% win, because they're willing to wait for the simplicity within the market and just execute without emotion. That's all it is. So see you next time anyway. Bye.